Hey guys, welcome back to another week of fundamental analysis. I don't think I've taken any losses this week. Let's have a look. But this was a loss as well. Okay, need to update that. We'll go through March on a separate video. Did take 2 L's in March, so we pretty much gave back our profits and some. We are on a loss streak right now, a 5 loss streak. But let's just go through the fundamental analysis for the week, and then I will run through my thoughts where I'm currently at in terms of my trading and whatnot. So this is the 30th of March to the 5th of April. Once again, guys, this is not financial advice. This is me merely putting in my thoughts on the market and where I'm currently at. It's for entertainment purposes only. COT report. So this week's COT report, we had sort of neutrality in the US index. We have Aussie coming stronger, and we have yen being weaker in terms of bearish people, the non-commercial traders shorting the yen, which I want to sort of follow the non-commercial traders and not everyone else, not the speculators. So that's in terms of currencies. In terms of the indices, we have more longs and less shorts, so it's a good thing in terms of longing the US 30 as a market. We've got gold actually coming down on longs, but coming down on shorts as well. So the actual open interest long is slightly higher, 82.4% now with gold. And then silver and crude oil, we just left that there for the sake of leaving it there. I'm not trading those two commodities. In terms of my data, we had a big US data print this week. We had consumer confidence higher than expected. Core retail sales, same thing. Average hourly earnings, we did have less than expected at 0.2 versus 0.3. But then we had ISM manufacturing maintaining that bullishness. So overall economic readings for US data is bullish. Labor market, we had all three labor market readings. We had neutral JOLTS, bullish NFP, non-farm payroll, and bullish unemployment rate. So very, very strong for US currently compared to Aussie, which had nothing. But again, we've seen, although it's bullish in economic, we had weak readings in the labor market and very weak inflation readings. So happy to trade AU to the short side, and then yen as well. We've had a couple readings here. We'd have Tokyo Core CPI being cooler than expected. We had retail sales cooler than expected, and unemployment rate being better than expected. Overall, neutral yen readings, bearish in terms of the inflation, so weaker currency, and I'm happy to trade UJ as well. Flipping through the graphs, we can see consumer confidence is picking back up, which is good. We see core retail sales spiked to its February reading, so back up from prior print. Retail sales, again, it's hard to sort of read. I guess you could say consolidating for the yen. And then employment, we can see NFP spike up, JOLTS stabilizing through there, and then unemployment rate coming down from the previous reading to its February reading. So that's that. In terms of my biases, so this is the community of traders. Economic reading, we're bearish on gold. Reason being, we've got neutral inflation, we've got bullish economic news, which is bad for gold, and we've got bullish US labor market data, which is bad for gold, or not in its favor. So I'm shorting gold, and the technical trend is also bearish right now, so I'm happy to trade gold short. In terms of with the US 30, we got a bearish technical trend. I have a bullish bias right now, so that cancels each other out. I'm not trading US 30. AU and UJ, again, we got strength in the US currency, so I'm trading to the dollar. And AJ, we've got neutral readings for both Aussie and yen. I'm just going to leave it alone. I'm not going to touch it. So Jumping to the charts, let's go on the 3 markets that I've chosen. Now, this is where there's going to be a little bit of a change from my previous way of trading. The strategy remains exactly the same. I'm still using, I wouldn't say fib retracement, but in terms of retracement from the pool, waiting for a pullback into the 50, at least the 50 zone to 75, if not 100. Now we're marking H4 zones. The reason being I'm marking H4 and not daily, although I'm following daily trend in terms of the moving averages. The reason why I'm trading H4 right now, guys, is because I'm using AI, using ChatGPT. There was something found out in the sense that because I'm only trading on average 2 trades a month, in the year, what ends up happening is my data is skewed. If I'm on a 5 trade loss streak, like what you guys saw at the start of my video, I'm on drawdown for 3 months, 2 to 3 months, with an average trade of 2 trades per year. So it's just not viable. I need to up according to AI, I need to up the frequency of my trades. So what I'm going to do now is take H4 trade setup. So with AU, and I'm backtesting this now, which is profitable for gold and US30. So right now what I'm waiting for AU is I'm waiting for it to tick back up here. And then if I have a nice print, 2 to 3 candles, I will take this trade through here and target, lower lows. So that's that. H4 trade setup. UJ, same thing. We've got this pump here. Okay, we've got that fib retracement marked out. We've got the zone marked in around here. That's 70% retracement zone. We will pop a alert here on UJ, and we would get in through here, have my stop loss there, and aim for targets. Trailing stop. Gold, same deal. Gold right now, in terms of the next point, what I might do is actually this. If I'm doing H4, we've got this small sliver here, which I will pull down, right? If gold can reach back up here, I will still trade off previous highs. I'll probably pop here and we will trail my H4 there. So those are 3 markets I'm in right now. Again, just to reiterate, guys, I am changing my strategy in terms of its parameters. My rules remain exactly the same. I am backtesting for 5 years worth of gold data. It is profitable. For 2 years worth of US30 data, it is profitable as well. I will continue backtesting, refining my strategy, and we will see, the increase in frequency, how that scales up. So catch you on the next one. Peace.